Okay, let's dive right into this. Welcome back, market watchers, to today's Daily Explainer. I'm your host, and we are covering the day 230 market update for the PLAZM protocol. Today, we're tracking a truly fascinating dynamic, undeniable structural growth happening right in the middle of deepening market fear. We're going to walk through exactly what the numbers are telling us today, taking a look at everything from treasury metrics all the way down to daily yield output. But first, just to set the standard for our broadcast, please note that this explainer is strictly for educational and informational purposes. It is not financial advice. As we all know, crypto markets are highly volatile by nature, so always conduct your own research. And, of course, never invest more than you can afford to lose. All right, before we look directly at the PLAZM ecosystem, let's set the broader macro stage. The Crypto Fear and Greed Index fell another 4 points overnight, dropping from 31 down to 27. So that pushes the broader market even deeper into fear territory. But, here is the real disconnect. Ethereum actually ticked up by 0.39% to $2,186. And Bitcoin, well, it held practically flat. So market sentiment is actively degrading, even though top-tier asset prices are holding steady. Now, when sentiment detaches from price action like this, it usually means emotional retail traders are fleeing, while institutional or structural buyers are firmly holding the floor. And that divergence right there is the core narrative setting the stage for what happened with PLAZM today. Looking over at the PLAZM asset itself, we see it firmly holding flat at $0.0115, actually closing out the day with a fractional 0.36% gain. Meanwhile, the eSHARE token dropped to $5.79. Now, this is a classic market divergence. You see, when the equity-like token, eSHARE, softens while the primary token holds flat, it typically signals that near-term yield seekers are rotating out of the ecosystem. But at the very same time, dedicated structural holders are stepping in to absorb their supply. The broader market didn't necessarily reward PLAZM today, but it certainly didn't punish it either. Now, what's really interesting about today's data is the headline number. It's truly remarkable. Over the last 24 hours, the PLAZM vault absorbed an additional 4.25 Ethereum. That brings the total vault holdings from just over 224 ETH up to 228.27 ETH overnight. This is the central story of day 230. Right here, a treasury continuing to accumulate major blue-chip assets while the rest of the market's sentiment slips further and further into fear. Putting that Ethereum accumulation into dollar terms, this nearly $11,000 volt gain proves the protocol's anti-fragile design is working exactly as intended. The Volt's USD value jumped from roughly $488,000 to just under $499,000. Now, a slight uptick in the daily price of ETH did provide a small tailwind, sure. However, the vast majority of this gain is purely structural. It's driven by steady bond purchases delivering Ethereum directly into the vault. This translates to pure sentiment-independent treasury growth. And the mechanics driving that structural growth are very clear. Bond demand remained incredibly steady today, with 70 net new bonds purchased. That brings the outstanding total to 13,772. Now, because more bonds are actively competing for the same yield pool, the bond APR naturally drifted down just a bit, moving from around 50.8% to 49.87%. Still, new bond buyers are entering at a yield level that is highly competitive. That rate is being shaped directly by this deeper fear discount currently hovering over the broader crypto space. Moving over to the yield engine, daily output actually saw a slight uptick, producing $682 today. This output is distributed very strategically, and it's worth breaking down. Roughly 65%, or about $443, flows straight into the buy and burn pools. Another 10% feeds buy and build. And finally, the remaining 20% compounds back into new bonds via the buy and grow mechanism. By utilizing this internal margin strategy, and it is absolutely crucial to remember this is a margin strategy, not leverage, the protocol compounded 3.76 new bonds today using its own contributions. Not fees, mind you, but protocol contributions. This means the system continues to grow internally, requiring absolutely zero new user capital to enter the ecosystem. And this brilliantly illustrates how the buy, burn, and build engine fires regardless of fear. For those of you newer to the ecosystem, think of these pools as an automated defense system. It constantly buys up PLAZM tokens to reduce supply and build value, no matter what the rest of the market is doing. Looking at the lifetime deployment metrics, the buy and burn pool has now spent over $83,000, while buy and build has successfully deployed just over $30,000. The current buy pool reserves sit at a healthy $2,310, just ready to deploy. The engine simply doesn't ask market sentiment for permission. As long as bonds generate yield, the protocol actively deploys capital while others panic. Taking a look at the overall supply distribution, the landscape remains remarkably stable. Out of the 13.86 million tokens in total supply, exactly 20%, or 3.44 million tokens, have been permanently burned. We see 59% sitting in liquid supply, 12% in liquidity pools, and 9% staked in active cycles. This careful balance means the ecosystem is highly liquid but retains deep, committed stakes, ensuring both trading efficiency and long-term security. Meanwhile, the cumulative claimed profits counter, which represents already deployed protocol capital, clocked an impressive $137,000 today. Let's move ahead and see how this builds into the rest of the week. Our 7-day release forecast actually shows a relatively quiet schedule. We had 0 PLAZM release today. Over the next 7 days, a total of roughly 106,000 tokens are scheduled to unlock. The only real spike happens tomorrow on day 231, with about 44,000 tokens, followed by much smaller releases on day 233 and day 237. The 80-day long-range scan shows no major cliffs, meaning there are clear skies on the supply side. So the crucial point is this: day 230 was a structurally positive day operating inside a sentiment-negative environment. As our verdict says, we are seeing structural growth during deeper fear. The protocol added 4.25 ETHs to the vault, 70 new bonds, slightly more daily yield, and burned more tokens, all while the broader market got a little more scared. This continuous momentum is literally the entire reason this specific architectural design exists. Which brings us to an interesting test for tomorrow. With market sentiment already quite shaky, will day 231's scheduled release of those 44,000 tokens introduce any real supply pressure against the structural growth we just witnessed? It is going to be fascinating to see how the system's buy walls and bonding mechanics absorb that fresh liquidity. We'll be breaking down those exact numbers in our next explainer. Thank you so much for tuning in to today's PLAZM Market Update. Once again, a quick reminder that this explainer is strictly for educational and informational purposes only and is not financial advice. Crypto markets are volatile, so please always conduct your own independent research. Have a great day, and we'll see you right back here for day 231.